Hi, if we haven't met yet, I'm Jacob Vernon, an investment advisor representative at Vernon Management Group, an investment advisor firm. Have you ever wondered if your retirement plan is up to date and if you're still on track to hit your goals? Well, if you created a retirement plan 5, 10, or 20 years ago, you may need to update it to make sure you will be able to retire comfortably. Today, we're going to go over almost everything in your retirement plan that you may need to review. We're also going to look at a sample retirement plan to make sure you know what to look for. First off, you need to review your financial goals. Make sure your long-term and short-term financial goals are up to date with your current financial situation. Next, you need to reassess your risk tolerance. Risk tolerance has a lot to do with your time horizon and age. You may not feel comfortable risking the same amount of money you did 10 or 20 years ago. After you reassess your risks, you need to review your timeline. Make sure you're still on track to meet your long-term and short-term goals. This will also help you decide if the investments in your portfolio are still suitable. After you've done these steps, you may need to look into rebalancing your portfolio. Rebalancing is important because it can help make sure that your investments are in line with your financial goals and also help manage your risk. By rebalancing, you can ensure that you aren't getting too heavily invested in one type of asset. Rebalancing can also help you stay ahead of market trends and make sure you're not unknowingly missing out on opportunities due to lack of diversification. Another thing you can do is try to take advantage of tax considerations. Taxes in retirement can be thought of in two different ways. First being, how do taxes affect your retirement income? And second, how do taxes affect the investments you make in retirement? Now, let's talk a little bit about how taxes affect your retirement income. Taxes play a role in retirement through Social Security pensions, IRA and 401k withdrawals, and also other income sources. Developing a withdrawal strategy may be beneficial for you to help minimize the amount of taxes you owe in retirement. Each investment so you can work to minimize your overall tax liability. Retirement regulations can change frequently, so it's important to stay up to date with these so you can make informed decisions. Finally, it's important to stay up to date on any changes in the tax code that may affect your retirement income or investments. One thing you can do to reduce overall risk in your retirement portfolio is to diversify. Make sure your portfolio has a good mix of different types of assets. A way to diversify is to put your money in various asset classes that react differently based on various market conditions. Doing this can help reduce volatility, provide more stability, and help you reach your financial goals. You may be wondering, what are uncorrelated assets? Well, let me start off by explaining what uncorrelated is. Uncorrelated means that assets don't always react to each other's movements. Meaning, if one asset drops, that does not mean that all the other assets will follow trend. Another option to increase diversification in your portfolio is to use uncorrelated asset types coupled with trendline analysis. Now, let me quickly explain what trendline analysis is. Trendline analysis is a form of technical analysis where a security's price action is analyzed to identify and form expectations about its future direction. Specifically, trend lines are used to determine important support and resistance levels.
Sure.
Support and resistance levels are price levels that tend to attract buyers and sellers respectively, thus impacting a security's price action. Investors can utilize trendline analysis to identify and project future investment opportunities using a security's prior price movements. By utilizing uncorrelated asset types coupled with trendline analysis, you can help minimize your exposure to the major drops the market experiences, helping protect your money. If you would like to learn more about uncorrelated asset types and trendline analysis, go visit our website at vernonmanagementgroup.com. Another thing you can do is look for value with your investments. There may be times where some investments may offer better value than others. Use this time to invest in investments that have good opportunity for future growth. You want to monitor the news. Follow market news to stay up to date with any changes in the world economy that could potentially impact your portfolio. Make sure to also save and invest for the future by creating an emergency fund, contributing to retirement accounts and health savings accounts, and also setting aside money for future education. Finally, it's important to plan for retirement. This is because it allows you to ensure that you have the financial stability and security to provide for yourself during your retirement years. Creating a retirement plan helps you make financial investments, create a budgeting strategy, and plan how to best use investments for long-term financial stability and security. Planning for retirement allows you to save and invest wisely for the future, providing you with greater flexibility as your life evolves. It also provides peace of mind and security when entering retirement years, enabling you to enjoy the later years of life to the fullest. Thanks for watching. I hope you enjoyed. If you want to see more content like this, leave a like and hit subscribe. And if you want to see anything else, leave a comment down below. Also, for more information on retirement planning, visit our website at vernonmanagementgroup.com. Thanks again.